All right, everyone. This is going to be the last video that I record on employer stock and the overexposure to that, and various ways that you can strategically try to maneuver out of that employer stock. This last one is the one that I have the most fun utilizing. It makes the most sense for individuals who maybe are not maxing out their current 401k contribution. So what I call this is going to be kind of that tax arbitrage. So your ordinary income tax is typically significantly higher than what the capital gains tax is. And also you're only going to be paying capital gains on the gains portion of the stock. So you can strategically move out of a lot of employer stock without having to make as much of a contribution to your 401k to kind of offset the income. And so it's really smooth and easy to do. You actually end up instead of the money that you normally live off of through your paycheck, you can actually utilize some of the stock proceeds for that. You can diversify the remaining amount. And so mathematically, you do want to work with a CPA or an advisor to kind of find out where those breakpoints are going to be and what's going to be the most efficient way to make sure you're still receiving the normal income that you need over the course of the year, and not just pouring everything into a 401k and then reinvesting everything from the equities that you sold off on the employer stock. If you are able to do that, you're probably in a fantastic position, and by all means go ahead. But usually most of the people I'm working with, everything's usually accounted for when it's coming to your mortgage payments, all the different expenses that you have, and saving for retirement. So if you do have some wiggle room and can contribute more to a retirement account and defer that income, you're typically going to receive a lot higher savings as far as tax goes as you're deferring that than what you're going to be imposed on the capital gain side. So hopefully that's helpful, and feel free to reach out to me or reach out to your advisor that you already have at hand, and make sure that you're planning around this possibility. Thanks, everyone.